This is Pre-Market Prep. I'm Brianna Valesky with my co-host Joel Elcon, and we're joined by Ryan Craver. He's a retail expert and the Senior Vice President of Emerging Brands and Digital at Lamora Group. Ryan, thank you so much for joining us this morning.
Good morning, Brianna. How are you?
We are fantastic. Of course, most people are looking at the Fed, who says they're data dependent, but one data point I want to talk about with you right now is retail sales. How are they looking in your opinion?
So the August sales, I think they were interesting. As you know, I kind of like to look at the year-over-year increases or declines. I think largely the month-over-month met expectations. With that said, I think there were some interesting pieces. The first one was that food services remains incredibly strong. Year-over-year, it was up 8.2%, I believe, and that's further acceleration, which if you look at food services versus grocers, they continue to outpace them. They're much larger now, and it's the seventh consecutive month in which they've been larger than grocers. Beyond that, if you look at sporting goods did very, very well. They were up 6.1% year over year. I think that speaks to two pieces. The first one is they continue to steal market share from the department stores who were down again. But then the second thing is that this athleisure trend is no longer a trend. I think it's real. I think it's impacting a lot of companies and brands like Levi's and those who are very dependent upon denim. And I don't foresee that getting tired at any point in time. Non-store, which is the e-tailers or the internet retailers, I think we're still working off the hangover of the Amazon Prime Day. Obviously, Amazon had their Prime Day, but it had a massive halo effect on the other retailers who do online sales. Month over month, it was up 0.2%, but year over year, it was up considerably still. So I think that there is still that shift to e-commerce, obviously. And then beyond that, if we move up to the larger purchases, the auto and the home goods and the furniture stores, they all were still up considerably year over year, 3 to 5%, but they weren't seeing the 6, 7s, and 8s and 9% year over year increases that they typically do. So maybe that's because of the volatility in the market and people are basically pulling back on some of the purchases, but they still saw increases year over year. So I think it's setting it up for a pretty strong holiday season with early promotions. I think, again, largely it met expectations, and retail's fine.
So, Ryan, you made a very interesting point that big purchases like auto and home goods are up, but not as much as they usually are. I mean, what does that signal to you about the economy in general?
I don't necessarily know what it signals about the economy in general. What I do think is that it was baked into the minds of the buyers in terms of they saw the volatility in the market. They probably held off for that month. Volatility has gone down, but auto dealers, in our last couple of calls, I was talking about autos being up 8%, 6.5%, 7.5%, and now it's only up 6%. So I think it's a short-term issue. I think we probably will see some strength return this month. And they felt comfortable definitely going out and having a few beers and eating at restaurants, but they probably didn't feel comfortable going into dealerships.
I was interested in how you also mentioned sporting goods. They're stealing market share from some of the department stores. We've seen a lot of relative strength in some of those names as well, things like Under Armour, Nike. What are sticking out to you as far as sporting goods retailers?
Yeah. So I think largely in general, there's this macro trend of moving to athleisure. So it started with the Lululemons of the world. It moved into the Nikes and the Under Armours of the world. I think Under Armour obviously has a ton of strength. They're doing very, very well. They're still small relative to the big players like Nike. I think Nike does about $30 billion annual in sales. They only do about 3.5. So there's still a lot of room to grow for Under Armour. They're opening their own stores. They're going direct to consumer, but you're going to have to pay for it. If you start to look at sporting goods stores like the Dick's of the world, they were the first to jump on that bandwagon. They were the first that had very large portions of their stores dedicated to brands like Nike, like Adidas, like Under Armour. Whereas the department stores played catch up. And the department stores now do have bigger real estate within their stores allocated to that. And they're also coming up with their own brands. You know, Kohl's has their own activewear brand now. Macy's has their own activewear brand. So they're all playing catch up. It's no longer a trend. I think it's here to stay for the foreseeable future. It's become a more casual go to work as well as casual being on the weekends.
Well, let's talk a little bit more about some of those department stores. Can you tell us what you're seeing in a few names in that segment?
Sure. I think department store wise, JWN Nordstrom continues to be the best positioned. I think they have done the best job of articulating their longer term strategy to the to Wall Street, and they put their money where their mouth is. They continue to invest very, very heavily in digital, and it's not only in the way in which they're delivering, they're doing the monthly subscriptions, but it's also in the site rebuilds, the mobile app refreshes. And additionally, they've said very loud and proud, we realize that we've never gone international. We're going to do Canada right. And we believe that that's a billion-dollar industry very quickly for us, as well as entering Manhattan. So I think they've been very clear about that. They're not playing catch up to the discounters. They've had Nordstrom Rack. So I think that they're probably best positioned, and they've done the best job trading within this volatile period. Macy's is definitely seeing some negative comps year over year. I think they are not in the same type of growth phase that Nordstrom is. They're more in a grooming phase. The 35 to 40 stores that they outlined as closing, that's definitely grooming. It's not too crazy, but it is more than what they typically announce. They have done some strategic acquisitions within specialty like Bluemercury to try and play catch up to Sephora. But I think, it's still a wait and see for them. Kohl's, I'm a big believer in because of their national presence and how quickly they respond to the market, as well as a very strong loyalty program. I think they're down today. There's a lot of pessimism built into it. I think it's a bit overdone. I think we're probably at a bottom. We're now down to $51, and you've got a very decent dividend. But those are probably the top three that I talk about most. Beyond that, all of the retailers are seeing this struggle with Amazon, and each one's taking a little bit different position. You saw Macy's tying up with Best Buy. That's obviously a partnership to fight Amazon. And I think a lot of them are starting to think about, should they not just be an enemy, should they potentially be a frenemy? Should we start to think about ways in which we can use Amazon, given that statistics like 45% of shopping searches on a smartphone start at Amazon.com. But department stores are struggling, and this has been a decade-long, probably 20 years or so, in which they've tried to reevaluate who they are. And I think that they've got a lot of growing pressures ahead.
Let's talk about Amazon and some e-commerce. I mean, last thing I was reading about Jeff Bezos was him talking about his space company, Blue Origin. But what is going on with Amazon right now?
Yeah, Jeff Bezos is obviously an amazing leader, and he's definitely a firm believer in spreading multiple calculated bets. Whether it's the rockets, whether it's the Fire phone, whether it's the cloud services. I mean, these guys are not e-tailers as we know. Their breadth of services is pretty incredible. Obviously, retail continues to do very, very strong for them, the e-commerce business. As I've said before, they're shifting to services, so they're trying to own less inventory and become more of a platform, kind of like the Alibabas and the eBays of the world. That's doing very, very strong. Like I said, 45% of smartphone shopping searches start at Amazon.com,
wow,
which is an incredible statistic. Cloud services, I mean, they are positioned the best right now. They are the largest. They're it's just a great, great business for them. And I think beyond that, they are definitely turning up the pressure on grocery, driving more and more same-day purchases with delivery on that same day. And I don't see anything slowing for them anytime soon. At some point, the domestic market for them, the U.S., is not going to be the same growth market it is today. And then the questions about how well they're doing internationally will start to surface.
What about some other names in the tech space? Twitter, of course, we're all just kind of sitting and waiting, haven't had any news about the new CEO. I mean, what are you long and short-term outlook for Twitter right now?
Yeah, so Twitter, I have been very vocal in talking to you guys about the fact that I think it's a platform that's unlike any other. I was reading Anthony Noto's comments yesterday that he had at the Deutsche Bank summit or conference, and he didn't give us any update on the CEO. We've got Jack Dorsey saying that he's going to be a part of the Square IPO. I just think that, again, this is a platform that's got a very loyal user base. It's got 300 million people on this platform, which sounds like it's very small relative to the Facebooks of the world, but it's still a very loyal user customer base that they have yet to completely monetize to the degree that we think that they're comfortable. The challenge for them, obviously, is how do they get that non-loyal user or that user that sees a tweet on CNN or Fox News to come to the site and to not only be a part of the site during that live news, but also, go back to the site or go back to the app in the following weeks. And I think what's going to be interesting with this idea of Project Lightning is to see what they end up doing to the product. It sounds like that's the first time in which they'll actually modify the product. If you start to look at how they generate their revenue with the larger accounts, they are getting better in the way in which I, as a brand, can set up ads. They are allowing me to get down to the demographics of age, interests, location, and actually drive a very highly targeted ad. So yes, it's at 27. It's below its IPO price. But taking a little bet on it now, I don't see much harm in.
What do we know about Project Lightning right now? We've mentioned a couple times in the show, and I don't think we've ever just really kind of explained, like, what do we know about Project Lightning so far?
We don't know anything.
Right.
Anthony Noto, he really didn't say anything about it. I think what we may see is an additional tab within Twitter. We may see a way in which if you're a first-time user and you show up at that site or you open that app for the first time, you will easily be able to see a curated version of tweets so that only the top rises. What they need to be careful of is back to that 300 million plus users, the Briannas, the Joels, the Ryan Cravers of the world that are using Twitter today. We actually like the way it's set up,
right?
But all those other users don't. They get there, they feel that it's overwhelming. They don't know where to go. They don't know who to follow. And your river is only as powerful as who you follow today or the ads that they shoot your way.
Hmm.
So is there a quick and simple way in which Project Lightning can say to Joe Blow as he comes to the site, here's who you should be following, here's some relevant tweets to you. We see that you tuned in tonight because you're watching the Republican debate. Here's the best tweets that we've seen with the highest engagement over time. So it's getting people comfortable with the platform from the very start.
We're on the line with Ryan Craver. He's a retail expert and senior VP of emerging brands and digital in Lamar Group. Is it too early to start asking what's going to be hot Christmas items here? We are coming into the end of September pretty soon. Thanksgiving, and then the big Christmas shopping seems to start earlier and earlier. Identifying any products or any companies that may be in the limelight this year?
I definitely don't think it's too early. I think that in the very near future, you're going to start to see some very deeply promoted items. If you think about the world of yesterday, it was very tough for retailers to promote product because the majority of what they promoted was on floors. So you have to go into the stores, you have to rack it accordingly, you have to sign it accordingly. Whereas today, we can push price changes very, very easily digitally, whether it's on sites or it's in stores. Guys like Kohl's have digital signing in stores, and they can change it with the flick of a switch directly from their headquarters in Milwaukee. The brands that I think that are going to see a massive Christmas are some of the obvious ones. I think Apple's going to do a amazing job this Christmas, even though aesthetically they didn't change the phone. I think that there's a large upgrade cycle coming, and I think that a lot of people are short selling the changes that they made to the software with the peak features, which become the new features that we'll start talking about and become accustomed to and see the Samsungs of the world copy. Beyond that, I think it's going to be a big electronic. GoPro should do very, very well. I think that they traded down based on the Apple announcement, but they did the same. We had the same types of conversations last year when Apple came out with a better phone with a better camera. I still think that it is a very active entertainment brand that will do very, very well over the Christmas season or the holiday season. And then third, I'm not incredibly bullish on GameStop, but I think short-term GameStop will do very, very well. With the consoles are currently in the cash cow period where we aren't going to see any new gaming consoles coming out, but there's a very, very strong product lineup coming here with Star Wars, all of the EA Sports stuff, and I think that you're going to see some very, very high sales for them. And then within the toy arena, obviously, it's going to be Star Wars and dinos. It's going to center around the fact that Pixar's got a new movie coming out in November, dinosaur related, and of course the big Star Wars movie coming out as well in the November timeframe.
We're on the line with Ryan Craver. He's a retail expert as well as the Senior Vice President of Emerging Brands and Digital at Lamar Group. Ryan, thank you so much for joining us this morning. It's always great to get your monthly outlook on the retail sector.
Thank you for your time, guys. Have a great day.
You do the same.